Welcome to Finance Today for April 24th, 2025. I'm your host, bringing you the latest financial news and market insights. Today, we'll cover several important stories affecting the markets, economy, and your investments. Let's get started with our daily financial briefing. All right, folks, here's the scoop from Wall Street. US stocks were on a roller coaster ride Thursday, as investors tried to make heads or tails of mixed messages from President Trump and his team on tariffs. The Dow Jones took a dip by 0.4%, while the S&P 500 and Nasdaq Composite saw a small boost. The S&P 500's been on a hot streak, rallying over 4% in the last 2 days thanks to some tariff talk optimism. But this enthusiasm cooled a little when Treasury Secretary Scott Bessent made it clear there's no backing down from the trade war with China. Meanwhile, China's not backing down either, demanding the US eliminate all tariffs and denying any talks between the nations. In other news, Trump's got automakers in his sights, considering exempting them from the harshest auto tariffs, possibly hiking up 25% tariffs on cars imported from Canada. Over in the corporate world, IBM shares fell 7% after revealing cost cuts from the Trump administration impacted 15 government contracts. Chipotle also took a hit, with shares falling over 3% after its earnings missed expectations. Looking ahead, all eyes are on Alphabet and Intel's earnings, with investors on the lookout for any warnings about how tariffs could impact their future business. In a nutshell, it's a tough time for US companies, with guidance being pulled left and right due to tariff uncertainty. The takeaway? The impact of these tariffs on consumer spending and business investment is a major question mark right now. Stay tuned, folks. It's going to be a wild ride. Let's continue with another important development. Google to report first quarter earnings as investors look for signs of trade war impact. Alphabet, Google's parent company, is set to drop its first quarter earnings after the bell on Thursday. Wall Street is on high alert following Trump's tariff series on global trade partners. Analysts aren't forecasting any tariff-related impact on Q1 revenue or earnings per share, but all eyes are on any hints about potential hits in H2. Alphabet's shares are down over 19% year-to-date and roughly 3% over the past year. However, tariffs aren't the only worry. With more users flocking to AI agents and social media for info, agencies are reassessing their ad search strategies, according to Wells Fargo Securities' Ken Gorelski. For Q1, Google is estimated to post an EPS of $2.01 on revenue of $89.1 billion. Ads alone are projected to bring in $66.4 billion, with YouTube ads raking in $8.9 billion. Google Cloud Platform, GCP, revenue growth is another focus area for investors, as Google plans to spend a massive $75 billion on AI infrastructure and data center capacity by 2025. However, the tech giant is also grappling with the aftermath of recent antitrust losses. A US federal judge ruled that Google holds an illegal monopoly over the online advertising market, which may force the company to offload or restructure its ads business. For the latest on the stock market and financial news, stay tuned to Yahoo Finance. Moving on to our next story commentary, Trump's economic pain thresholds have emerged. In other words, he blinked. All right, folks, let's dive into the latest on the Wall Street roller coaster. President Trump is finally waving the white flag on his trade war, signaling it's time to do some damage control. He's raised import taxes from 2.5% to 27% on $3 trillion worth of products, even threatening to fire Fed Chair Powell at one point. Markets have reacted with a steep drop in stock values. Investors are ditching the America First mantra for gold or foreign currencies, bracing for higher inflation. Some economists are even predicting a Trump-triggered recession. But on April 17th, Trump surprisingly tweeted that Powell's termination cannot come fast enough, causing yet another market plunge. 5 days later, he flip-flopped, saying he wouldn't fire Powell, resulting in a market jump. Trump and Treasury Secretary Scott Bessent have also hinted at reducing the 145% tax on Chinese imports if China reciprocates. More than a dozen trade deals are reportedly underway, which could lower high tariffs in exchange for concessions from trade partners. Trump's change of heart is giving the market some relief. Stocks surged on April 23rd, while interest rates dipped, and the VIX volatility index declined. But remember, one rally doesn't mend all the damage caused by Trump's trade wars. Here's the kicker. Economists say the stock market isn't the real economy, but it predicts where we're headed. If Trump's tariffs lead to higher prices, lower profit margins, less spending, lower growth, and less hiring, we could be bracing for a recession. So, as the betting odds of a US recession rise from 20% to 66%, Trump's trade war backpedaling seems like a desperate attempt to avoid becoming the president who tanked the market. The verdict: it's high time we return to normal markets, free from the destructive forces of protectionism. Next up, we look at the market is cheering Trump's positive tariff signals. Deal details remain scarce. This week, President Trump and his team have been bullish in their efforts to secure trade deals, creating a buzz that's seen a spike in the stock market. However, these claims haven't yet been backed by solid progress. The White House's mixed messages on trade, especially concerning the US-China tariff dispute, are causing investor confusion and market uncertainty. The administration's public proof of progress is merely plans for formal talks, with no clear status on major discussions, including those with China. Trump's recent comments suggest everything is in motion, but Treasury Secretary Bessent insists tariffs must come down before talks with China can begin. China, on the other hand, wants more respect before entering formal negotiations. Foreign Ministry spokesperson Guo Jiakun has said China is not afraid of a trade war, but its doors are wide open for talks. There's a growing gap between the White House's optimistic rhetoric and the real status of negotiations. This pattern is not new in the Trump administration, with promises of swift, easy deals often followed by slow progress. On trade talks specifically, some experts warn that market patience might soon wear out. In conclusion, the Trump administration needs to quickly secure a deal, or risk the whole situation unraveling further. The challenges of investing in the midst of this uncertainty are likened to navigating through Hurricane Donald. The week has shown a clear divide between the administration's confident talk and concrete results. Stay tuned for more updates. Now let's examine stock market today. Dow rises 400 points, Nasdaq gains 2.5%, but mega rally fades in late trading. Hey there! US stocks soared on Wednesday after President Trump confirmed he has no intention of firing Fed Chair Powell, calming Wall Street's jitters over the bank's independence. Trump also hinted at reducing tariffs on Chinese imports, causing the S&P 500 to close up nearly 1.7%, the Dow Jones jumped over 400 points, and the Nasdaq Composite led with a 2.5% increase. However, stocks cooled after Treasury Secretary Scott Bessent clarified there's been no unilateral offer from the president to de-escalate Trump's trade war with China. Yet, Trump's more measured tone did instill some optimism. Moving to company news, Tesla's stock shot up 5% after Elon Musk announced he'd cut down his Doge time. Other winners included Bitcoin, Nvidia, Meta, and Amazon, all climbing about 4%. But not all was rosy. Chipotle's Q1 report missed predictions, with its first same-store sales drop since COVID-19 shut down stores in 2020. Chipotle's CEO cited consumer uncertainty and money-saving efforts as reasons. To wrap it up, Wednesday's market action was a rollercoaster ride, with the Dow Jones experiencing its third 0.000-point swing in 3 days. The shift in Trump's tone on tariffs and the Fed chair injected some positivity, but mixed messaging kept investors on their toes. Stay tuned for more financial news and updates. Our next financial story focuses on Bessent. US and China tariffs need to come down before talks can start. Hey there! Let's dive into the latest from Yahoo Finance. Treasury Secretary Scott Bessent has strongly denied that the Trump administration is considering slashing tariffs on Chinese imports unilaterally. According to Bessent, any reduction in tariffs needs to be mutual between the US and China before any trade talks can begin. Right now, we're looking at tariffs of 145% on Chinese goods and 125% on US goods imposed by China. Bessent has also dismissed reports suggesting that the Trump administration is mulling over cutting tariffs on Chinese goods, in some cases by more than half. Meanwhile, Bessent is hopeful for trade deals with 14 other countries, and he's revealed that the US is very close to striking a deal with India. On the home front, he expects clarity on tariffs and a new tax bill by the third quarter of this year. There's also been chatter about President Trump's relationship with Federal Reserve Chair Jerome Powell. Despite recent social media posts suggesting Powell's termination, Trump has declared he has no intention of firing him. And Bessent? Well, he's warned that ousting Powell could result in market chaos. So what's the takeaway? Well, it looks like we're in for a rollercoaster ride with US-China trade talks, potential new deals, and the future of Powell in the Federal Reserve. Stay tuned for more updates. Let's continue with another important development. Trump comments on Fed Chair Powell, trade war with China show he's starting to feel the market. Hey there, here's the latest from Yahoo Finance. Stocks are seeing a boost after President Trump's recent comments eased investor worries over a spiraling trade war with China and the independence of the Federal Reserve. Trump confirmed that he's not firing Federal Reserve Chair Jerome Powell, and he hinted at a significant reduction in tariffs on China. These comments reversed a market narrative that sparked a near 1,000 point loss in the Dow Jones on Monday. Strategists suggest Trump is now more attuned to the market's reaction to his policies, a shift from his previous stance. This new approach has driven a binary market action. News of tariff de-escalation sends stocks higher, while any hint of a tougher stance sends stocks lower. The S&P 500 was up over 3%. The Dow Jones added 1,100 points, or 2.8%, and the Nasdaq composite led the gains with a 4.1% increase. But it's not all smooth sailing. Some warn that if economic data worsens later this year, we could see the S&P 500 retreat. So while we're seeing some positive movement right now, the market's future still hinges on Trump's policy rhetoric and the economic forecast. Stay tuned for more updates and analysis here on Yahoo Finance. Let's continue with another important development. Trump tariffs live updates. China pushes back as Bessent denies unilateral US tariff cuts. Here's the scoop from Yahoo Finance. China has rejected US trade overtures demanding all tariffs be lifted and denying any progress in negotiations. The Commerce Ministry spokesman slammed reports of ongoing talks as groundless. Meanwhile, China's central bank governor warns of global tensions escalating to high friction, low trust. Stock futures have dipped after a surge, driven by hopes of easing trade tensions. This comes despite President Trump hinting at a trade war de-escalation with China and showing optimism about trade talks. The tariff tussle between the world's two largest economies is intensifying. China raised duties on US goods, while US tariffs on Chinese imports have skyrocketed. But tariffs aren't just a China-US issue, with investors monitoring other key tariffs, delays, and exemptions. The 10% baseline tariff that came into effect on April 5th still stands for all affected imports into the US. On the home front, Americans' trust in Trump's ability to boost the economy seems to be wavering, with many fearing a recession and price hikes due to tariffs. Companies across sectors are now revising profit forecasts. Among those feeling the pinch are PepsiCo, American Airlines, and Merck, all citing increased costs and volatility from the ongoing trade war. In a nutshell, the trade war is far from over. It's causing financial anxiety, not just between the US and China, but also domestically in America and across various industries. Stay tuned for more updates. Moving on to our next story. Stock market today. Dow rises 400 points, Nasdaq gains 2.5%, but mega rally fades in late trading. Hey there. Let's talk about the market buzz. US stocks skyrocketed on Wednesday, thanks to President Trump clarifying he has no plans to fire Fed Chair Jerome Powell, easing Wall Street's anxiety about the independence of the central bank. Trump's softer stance on tariffs also brought cheers, hinting at reducing Chinese import duties. The S&P 500 closed up with a 1.7% gain, while the Dow Jones soared by more than 400 points. The Nasdaq led the pack with a 2.5% rise. However, the celebration was cut short due to a lack of commitment from Trump to cool off the trade battle with China. But the general optimism held strong due to Trump's mellowed comments on tariffs and his reassurance on Powell's position. In other news, Tesla shares rose over 5% despite missing Wall Street estimates, thanks to Elon Musk pledging to reduce his time on Dogecoin. Other big gainers were Bitcoin, Nvidia, Meta, and Amazon, each rising about 4%. On the downside, Chipotle missed Q1 expectations, with the first drop in same-store sales since the COVID-19 shutdowns. The Fed's Beige Book highlighted the impact of tariffs on the outlook, suggesting that businesses are likely to pass additional costs from tariffs to customers. In conclusion, it was a roller coaster day for the Dow Jones with a 1,000-point swing, ending with a 418-point addition. Mixed messages on the tariff policy from the Trump administration kept the markets on their toes. Stay tuned for more market updates. Next up, we look at Americans are expecting a tariff-fueled price surge. Corporate America says they're right. Morning Brief. Here's your daily scoop from Yahoo Finance's Morning Brief. Two heavyweight members of the Dow Jones, Verizon and 3M, are making it clear. If tariffs costs become reality, they're passing it on to you. Verizon CEO Hans Vestberg warns that if tariffs on handsets shoot up, consumers will take the hit. And 3M, they're predicting a $200 to $300 million blow from tariffs, and they're prepared to offset this by hiking up prices. Yes, you heard it right. They're planning selective price increases where feasible. A recent study from the Boston Fed confirms what we've all been suspecting. If tariffs go up, so do prices. Federal Reserve Chair Jerome Powell warns that tariffs could cause a rise in inflation that could stick around. The big question is, how will smaller businesses cope? Wall Street Journal reports suggest that the harshest levies on Chinese imports could push small businesses to the brink of extinction. Verizon and 3M might have the clout to absorb or pass on costs. But what about the little guys? They employ as many people as the giants, and they could be facing a rough ride. The takeaway? If tariffs rise, we all pay the price, one way or another. That concludes our financial news summary for April 24th. Thank you for watching Finance Today. If you found this information valuable, please consider subscribing for daily financial updates. Stay informed, and I'll see you tomorrow for more market insights.